Hey everyone, my name's Andy. My channel's Finding Value. If you like making a bunch of money, if you like uranium investing, if you like commodities, this is the channel for you. Click subscribe. You'll see why after seeing these presentations that I give. Give me a thumbs up for the presentation. Leave comments, questions below on anything that you got in the comment sections. Disclaimer, this is my opinion about uranium investing. This is my approach. This isn't the Bible where everyone should follow this approach. It's not that. This is a financial education channel. It's not financial advice. That's my disclaimer before showing you companies and how I view the uranium sector. This is how I view it. This information was gathered through my means, through internet searches, through articles, all these different things that I've read over time. And I'm going to show you kind of my viewpoint on the uranium sector and how I approach the uranium investing, my own approach to this. So this is me. This doesn't mean it's right for you, but I'm going to show you my approach here. I call this uranium investing presentation. So uranium investing, this is what I'm going to go over in this presentation. What creates value in mining for investors? We're going to look at supply. We're going to look at market deficits over time, which is the supply-demand balances. I'm going to give you my opinions and approach to investing in this sector. I'm going to give you, on top of this, what companies I like and the valuations, very quick, rude valuations. And again, I didn't include all the companies available. I included a lot of the ones that I hold. So you're going to see exactly what I hold in this presentation at the end of this presentation. So value creation for mining companies. This is what creates value for investors. It's one, exploration, which is adding pounds in the ground, and two is developing and producing mines. It's when you go from a developer to a producer. There's a lot of value that's created there. And what I see in the uranium sector is a very unique situation. And it's where the uranium has deficits that are very large in the future. And the majority of possible production will go into production at some point in the future because the deficits are so big. And I'm going to show you what that looks like in the next couple of slides here. So this is the supply. I'm going to just touch on the supply side of production and also the demand. The dark line's the demand here. And you can see the demand is really starting to take off here. Up here in the 2020s. And one thing I want you to focus on is the uranium production. And the production is about 150-ish right now. That's kind of where we're at today. It's dropped down a little bit, but let's just say about 150 was what it was a couple of years ago. That's probably what we have at a max capacity roughly right now, maybe around a 150-ish million pounds. Because it's important to understand that we're at 150 supply, and I'm going to show you what it looks like in the future of the deficit, the gaps, and how big those deficits are. But right now, the demand is starting to exceed supply, which means that we're eating into inventories around the world. And eventually, we're going to have to bring supply back on. But if supply wants a $40 to $60 per pound number, we're going to have to get to 40 to 60 pounds before supply starts to really respond to the demand outstripping the supply. So supply is going to be responsive around that $40 to $60 mark, depending on how much supply the market wants. So here is the red cloud market balance. This is looking at the supply-demand balance. And what we see here is when you have the red bars, which is in millions of pounds, when it's under zero, it means you're running a deficit. When it's above zero, it means you're in a supply surplus. What we want to see as an investor is we want to see this surplus and deficit kind of go to zero, and then we want to purchase it in that time period. And then we want to see a large, we'll call it supply deficit going forward. And that's exactly what we see in uranium. A gigantic supply deficit. And these deficits out in the 2030s, they get quite large. They're all over 50 million pounds per year, and some of them are 100 million pounds. And when you look back, I said we might be at 150 million pound per year, kind of the supply, what's out there supply wise. Maybe it's a little bit more, but it's around there. 100 million is, I mean, that's a large percentage of the existing total supply that we want to ramp up and use. So we're gonna have to use and add to the supply side potentially 100 million pounds in the mid 2030s. So I think this is going to be a very long bull market. I think it's going to be a very, we'll call it very rewarding market if this continues to go into deficit strength. It means that prices are going to have to continue to move up for new production to come online. So I'm going to touch on my approach with this gigantic deficits out there ahead of us. This is what my approach would be to uranium investing. My approach here is that there's a group of companies that can provide exceptional value to investors. What I do and what I'm looking for is the exploration developer category, where they're already kind of developing a mine, but they can also have a little bit of exploration on top of it, or they can transfer some of those inferred pounds to maybe a category over, I think that's indicated. Indicated and inferred, I think, are the two. I get it mixed up with oil because I always look at oil. So wherever we have the exploration developer category, that's where I'm really looking at, because there's huge leverage to the price and exceptional shareholder value from that group of companies. And I'll go over what those companies are that are in that exploration developer category. I'm spreading out my money amongst all of them to capture the returns of these companies, all of them, because the deficits are so large in the future that the majority of these companies are going to be mining this uranium. They have to. The deficits are so large out there that I think the majority of the ones that are in developing stages right now are going to have to produce at some point when the prices go higher. So I think the leverage, the opportunities, and how many companies are out there offers investors incredible value and returns, I think. And again, this is going to reward the patient investor. It's about positioning, finding those companies, and sitting tight. And what I do is I continue to cost average into positions. I don't sell or trade in and out of these companies. I find companies that are at that developer exploration stage where there could be potential more exploration on their properties. And they're also they're in process of developing mines. So I think that's a very good spot to be. Also, the valuation. I want to touch on the valuation of uranium. The value of uranium in comparison to gold has never been this cheap. It's at 62 pounds, or maybe even a little bit more than that now, to 1 ounce gold ratio, which is incredibly cheap. I'll show you on the next slide what that looks like in a graph. The valuation of gold to other assets like stocks and money supply has never been this cheap. So it's not like gold is expensive. Gold is cheap and uranium is even more cheap. I think we have a very large opportunity to invest in commodities, and especially uranium, because of its value and leverage to the price of gold. And if gold is cheap, if gold is incredibly cheap against all other assets, and uranium's cheap in relationship to gold, we could really see a high revaluation of uranium against other assets. And that's what we want to do as investors, is find these anomalies in history and capitalize on those anomalies with investments. So this is the uranium to gold ratio. I put a star up there. That's where the valuation is today. I don't think it's ever been this cheap. It hasn't been this cheap since 1970, not even close. We did almost hit 50, but we're clearing that very easily. So the money is not in uranium, definitely not in uranium. And we can see this through this ratio. Basically, everyone's sold out of uranium, and they think that uranium is that money's rotated out of it. So with the money not there, I think that we have limited downside risk and a whole big upside potential. So I think if we identify companies that are in the right stages we could find some absolute killer investments in this sector. Here is the Dow to gold ratio, and I'm showing you how cheap gold is. In the 1929, in that market peak, that's where we are today, is the same as the 1929 peak where it peaked out and crashed. And these valuations above 15, I would say, are very rich for the Dow against gold. And whenever the Dow is outpacing gold right now, gold is pulling back. This could be a shoulder, head, shoulder formation. I think they could be monkeying around with stuff in here in terms of gold prices because I think they're trying to push this up because it was forming a shoulder, head, shoulder here where it's going to head back down. I'm still looking for this to head back down, which means gold's going to outperform stocks. And if that's the case, which is the case in every commodity bull market that we've seen, I think we're going to see incredible returns in uranium in relationship to stocks, to other stocks. Here's the gold to monetary base ratio. I'm just showing you how cheap gold is. This was the little blip till 2011. I think this is 2011 here. And then we're still down here. Yes, you could have an argument that we're still cheap, but it looks like we broke this downtrend here. So that's good. If we can break this downtrend here, that would be even better and means that gold is strong like bull. And I think uranium, gold, oil, all of these commodity companies will do extremely well. Now, here's the price of uranium. One thing I wanted to touch on is we did break this downtrend line and we're making higher lows, which is incredibly good to see because we're seeing strength in the uranium price. Eventually, this strength in uranium price will filter its way to the uranium mining companies. The companies have had some strength, but the price in terms of uranium has not moved substantially yet. So what we're probably going to see is a little bit of a pullback in some of these uranium mining companies. And whenever this thing turns around, and what I think might happen is, remember, these things are contracts. They're not openly traded on the market. We might see a contract at some point fling this thing up to $45 or $50 or something like that, where we could see a big step change. So I think what's important here is to position and sit in the companies and cost average in, because if we see that large revaluation change very quickly, you want to be in the companies for that valuation change. Because if the price were to jump up for whatever those negotiation of the contracts or however that pricing works, I don't want to be out of the stock. So I'm being in it and I'm cost averaging in, trying to get the cheapest shares as possible. My approach has been to spread out the investments, and I'm going to kind of go through why I'm doing that. The risk reward profile is different in uranium than other sectors. We have a very large market deficit projected in the future. It takes a long time to explore, develop, and produce uranium. And I don't think there's that many companies in the sector at the stage of development to produce mines. I mean, there's some, but there isn't. It's not like thousands like gold and silver. These are pretty limited. And you can basically spread your money amongst almost all of them and then have a little bit in everything. And with the potential in the market in terms of returns and leverage to gold and stocks, I think this is a pretty easy bet to just capture all of them. And from what I understand, the last bull market, all of them performed exceptionally well. So I'm at the point where I'm just trying to capture all the gains I can in the sector. And if we have 1,000 bagger or 50 bagger or whatever it is, I want to capture those gains. Again, returns are so large, it is better to have money in all of them than to try and pick and choose. And if there's only 10 or 20 really good choices, I think you might as well just put a little bit in each. And uranium demand is very inelastic to price movements. This is another very important thing to understand, is that when these nuclear power plants, when they run, they're going to have to use uranium. And the price of uranium, it's not a large impact to the end user because uranium is so energy dense. The energy return on it is so high. So we could potentially have a position where uranium price does go up quite substantially. And I don't think it's going to affect or impact the end users of electricity from the nuclear power plants. And the approach and why. So we have a large market deficit out in the future, and we don't have too many explorer developer companies. The majority of these developers will need to go into production because of timing. The shareholder returns at this stage of mining development are gigantic. And I'm going to show you the development of a mining company and kind of the price returns. So this is the life cycle of a mineral discovery here. And this is the life cycle. This is the speculation, exploration phase where they're finding and drilling holes and hitting things. So this is the junior exploration companies are typically the first on the ground, proving a geology concept with surface exploration. This is the speculation phase right here, the initial drill results providing some insights as to what truly lays beneath, but more work is necessary to define a mineable deposit. Early speculators buy into the project, and that's what this first hump is right here. This is the speculation exploration portion. This is the discovery portion. There's a tipping point in exploration when drilling amounts to a real mineral discovery, and excitement is at its peak. Then after this, we'll call it discovery phase, it comes down and it goes into what is called an orphan period. After initial excitement, proven discoveries require large amounts of capital for construction, but are not yet receiving cash flows from an operating mine. So it kind of comes back down. And this is where I like buying companies, is this low point here. They've done the exploration. They are developing a mine. So everybody's kind of pricing it all out. They're saying, oh, they need CapEx and whatnot. And this is where I load up. It's this, you're kind of at the end of the feasibility study, and they're going to do a development, startup, and then depletion. But the development phase, we're right at the beginning. And there's a couple of companies that are right there. And some of them are still adding value on this drilling on exploration over here. So the ones that I get really, really excited about because the deficits are so large is this beginning portion between feasibility and development. That's where I like to be, right there. And if I can get a little bit of this, even better. And then you go to operating mine. So between the development and startup, it goes all the way up, and then we start to deplete the reserves of that mine. So nuclear power is green. This is more evidence to or reasons to be in the sector. Nuclear power is green and can provide baseload steady power to the grid. Solar and wind cannot and are not nearly as reliable. Nuclear power has a very high return for energy returns on energy gathered. So it gives a lot of power to society, which is energy to do whatever you want in society. It generates electricity and can produce hydrogen as a byproduct. We are ramping up our uses of electricity for electric vehicles and can provide hydrogen to hydrogen fuel cells. So it's a win-win on some of these nuclear power plants. So here's the companies that I'm playing with the next bull market. I still diversify amongst a lot of sectors, but I'm overweight in this sector with some of my accounts. I'm looking for explorer developer mix with experienced management teams. So here we go. These are the ones that I like. Again, this is not financial advice. This is just financial education, and I'm showing you what I like. So these ones that are in this development stage, I like. So Denison Mines is I like Denison Mines. I like Next Gen Energy. I like Encore Energy quite a bit. Bill Sheriff, the CEO. And right here, this is the name, this is the ticker, the market cap, the reserves, and this is the dollar per pound that you're paying for. That's market cap divided by the reserves is your dollars per pound. And these change because the market is open and it's fluctuating up and down. The ones I really like, I like Next Gen Energy, which is in Canada. They have a very easier mining deposit, the Arrow deposit, 530 million pounds. Encore Energy, I like the CEO, Bill Sheriff. I like that technical team. They just picked up a bunch more pounds in the ground. I think they're at around 70, I think, right now, in terms of million pounds. Deep Yellow has some exploration upside. They are also going to develop a mine and be a tier 1 producer. I think that's a good one. Deep Yellow. It's in Namibia, Africa. I like Fission. That one's pretty good up in Canada. Pretty easy to mine deposit. I like that one. Some exploration, like Blue Sky Uranium, I do own that one. I'm trying to remember, I might own Paladin, but it's not very much. I own quite a bit in Goviax Uranium. That's one of my favorite ones. They're doing exploration still. They're in the development stage for being a developer, and they're in Niger, Africa. We've got Global Atomic. I like them as well. They are close to having a producing mine. So that one's is good. They're in Africa as well. I like Bannerman quite a bit. Bannerman's very cheap, but all these are all very cheap on a pounds per market cap per pounds in the ground. They're all very good. Laramide's pretty good. That's very cheap. That's in the United States. Baseload, ISO Energy, Baseload, all these down here are exploration companies, and I own a little bit in each of these. But the ones that are developer and have, I think, good potential are these ones like Denison, NextGen, Encore, Deep Yellow, Goviax, Global Atomic, Bannerman, and Laramide. I just got money kind of spread amongst all those. I do think Paladin's fine. There's nothing wrong with them, but they are a producer already. PCJ is a producer. UUUU, that's a decent one. They've got some rare earth metals. URG is fine, but a lot of these are they're fine. There's nothing wrong with them. So those are kind of my favorite. I know this is getting kind of long, but that's why I'm choosing these companies. I think the uranium sector is, we'll call it, unique with so little companies, and the returns could be so large, and the deficits are so large that I think a lot of these are going to have to go into production. So with so little companies, with such big opportunity, I put a little bit in each. That's how I'm playing it. And I overweight some of these ones that are my favorites. I'm not going to tell you what my favorite of favorites are. You can probably figure that out through previous videos. But figure out which ones you like. I think the sector is a good one to put a little bit of money in and to just sit there. Because when it does hit and when it does come, we can see prices really start to take off. And then I think a few years out there, maybe it's 4 or 5 years out, we'll really start to see this thing take off, because these mines are going to have to come on and start producing. And that's the opportunity. That's the opportunity, is when you go from exploration, developer, to producing. That's where the money's made. So I'm trying to get my money spread out in all those companies to make those big returns. If you guys like this content, give me a thumbs up, leave comments below. If you haven't subscribed, just click subscribe. I'll continue to do updates. I'll do technical analysis on a lot of this stuff and let you guys know when I think a short-term bottom may be coming. We're still pulling back in the overall sector, and I think opportunities are going to be ahead of us very soon to pick up some cheap shares. At least I'm hopeful of that. Hopefully we can get this to pull back a little bit more and I can start loading in. Thanks for listening. This is Finding Value.